G'day folks, Jim here from FX Charts with the currency outlook for week beginning Monday the 20th of April. Dollar was on the defensive really at the end of last week. Ongoing soft data is keeping it under pressure. There's no real need, it appears, for the Feds to hike rates anytime soon. So the dollar has been a little bit softer, and it looks as though we could be in for some more of the same this week. Although having said that, the Greek situation is approaching a point of no return, it seems. And if there's a Eurogroup meeting later this week, Thursday, Friday, and if Greece is unable to outline how they're going to repay their debts, it looks as though if they don't receive any further funding, it looks as though they could be heading towards a default in early May. So I think the upside for the euro may be somewhat limited. Overall, it's going to be pretty choppy. We'll go and have a look at the charts and see what they've got to say. Right. Well, as you can see here from the 4-hour euro chart, it's basically found itself within a range of sort of 105, 110, really over the last month. It was looking quite offered at the beginning of last week, but it's since recovered quite nicely. The dailies are suggesting that we could head a little bit higher, and now these tops up around here, around this 110.30 area, are really what we're going to be looking at. It's currently at 108, and go back to the 4-hour charts here, currently at 108, and it does appear to me that there's a good chance of, particularly if the US data does stay soft, of heading a little bit higher. I think in the longer term, the dollar bull trend is intact, but if we do head above this sort of area here, this 110.50 that we got up to on what was it, the 26th of March, if we do head up there and beyond, then the downtrend is going to be looking, so the uptrend for the dollar is going to be looking pretty iffy. But with Greece always in the background, I think the euro is going to struggle. The Swiss franc is probably going to be the main beneficiary as that sees an inflow of funds. But back to the dailies here, and as you can see, we are heading a little bit high. We've got some resistance here. This red line here is the pivot point. As I say, that's around 110.50. This low out down here, I think it was 110.94. Now, if we go above there, then I think we are on our way higher. But until then, it looks as though we're just into some congestion. We go out to the weeklies. As you can see here, it's been pretty choppy and pretty horrible. But the thing that does concern me a little bit is these MACDs do look to be. Let me just blow that up a little bit. They do look to be turning a little bit higher. So I'm not really sure that we're in for any sense of the US dollar trend returning at any time soon. And it looks to me as though we are in for some more choppy trade. So while it stays within that 105, 110 range, I think we basically just trade that and try and steer clear of the noise in the middle. So all up though, it looks to me as though it's not going to be a very easy ride, at least for the next week or 2 weeks. As for today, Monday, we've got minor rising trend support here, and the euro having closed at about 108. It did see a bit of a spike down here to 107.30 on Friday, and we've got a couple of minor bottoms down there, so that's going to provide initial support along with this kind of minor rising trend line. Below there, we'll head back down towards the sort of 200-day, 100-day moving average, where they're crossing at around 10, where is it, about 107, and below there 106 3/4, 106.70, something like that. I'd be pretty doubtful of going below there today unless we do get some bad news out of Greece. But below there would take us back down to these lows down around here, 105.70, and down to sort of around 104.60, 105, where the trend is so far based. On the top side, the hourlies actually aren't showing particularly that there's too much upside momentum in for the coming session. We did get up to 108.48 on Friday. Now above there would take us back to this high here, 108.85, and then onto the short-term FIBO resistance at just above 109. Beyond there, then we are possibly heading back to where it's 109.5, and then up to this 110 area which will be tested 110.5 around here. But that's not going to happen today. And really overall, I think probably look for 107.30 to sort of 109, 108.5, 109 to cover it. There's not an awful lot of data out today. We've got the German PPI and the Bundesbank monthly report, and then some Chicago Fed activity, but that's about it. So it could be a bit of a choppy day, driven really by any political statements that make the headline news later on in the session. Right, moving forward to dollar yen. And dollar yen's kind of been moving a little bit lower. It's choppy and it's very slow. It's taken most of the week to move down from sort of 120 to 119. Receiving a little bit of benefit. The yen is from some inflow of safe haven funds, I think. But at the end of the day, it's a fairly slow move. The 4-hour charts aren't really showing any sign of turning around, and the dailies actually do look to be just building a little bit of downside momentum. And having broken this trend line here, and also below the 100-day moving average back up here at where are we, 119.20 or so, having closed down at 118.80, it does strike me that we could actually start to move a little bit lower, and could look at this low down here. Where was that? 118.30, 118.20. That's going to see some support. Below which we're sort of heading back down towards this sort of 1017 and 3040 area. The weeklies, the momentum there is actually quite negative. So I suspect that the top side for dollar yen is actually fairly limited at the moment. If we do start to make some acceleration, we could I guess head down to sort of this 115 area over the next couple of weeks. I don't think we're going that far. I think it's going to be a slow, choppy move. But it does seem to me it's the downsides that going to be in favour. The top side, well, 119, that 100-day moving average I just showed you, that's at 119.22 actually. So that will come in here, roughly where this trend line's been broken. And then back above there, we're heading back up to this sort of 120 and 121. Don't really see it for the time being, but you never know with dollar yen. You can get the odd spike that comes out of the blue. But I think for now, I'd probably rather trade it from the short side. That's that. Moving on to cable, we'll go back to the 4-hour charts. Cable's been pretty well bid recently, given that we've got a lot of uncertainty over the UK election, which is coming up on May the 7th. Now, it's been capped for the last 4 or 5 occasions at just under 150, and actually took that out on Friday and moved up to this 50% pivot of the move down from 155.5 to the lows. We got to the 50% pivot. It rejected them fairly sharply, and it's closed back at 149.60. Now the 4-hour charts do actually look as though they might have put in a bit of a peak here, but as far as the dailies are concerned, they look pretty positive to me. And cable's been in this channel for quite some time, going back to the best end of, I guess, about a year, something like that. So this is July last year, July 14. So it seems to me that we could well try and test the top of the channel. Now, there's going to be good support here. We have got the channel top. We've got the 23.6 Fibo resistance of the whole move down from 171 3/4, and we've got the 100-day moving average at sort of 150. Where's that one? 152.20, say. But moving lower. So over the next couple of days, it wouldn't surprise me to see a little bit of a move hard to test the top here, and that will be at about 151, 151.20. But it's going to be very choppy, as I say, with the election and the chance of a hung parliament. I wouldn't want to be getting too long sterling up here, and I think probably starting to look to sell into the strength for another eventual test of the downside. But as with the euro, it's going to be a pretty choppy affair, I think. The weeklies are not really showing any sign of a major turnaround, so I don't think I'll be getting too excited on the top side. But for the time being, buying dips, looking for that 151 area, 151, 151.20, and then selling at the top of the chart with a stop loss above the 100-day moving average seems to be the plan for the time being. Dollar Swiss, just cover that off quickly. Dollar Swiss has been leading the euro, really. It's almost back at its early April lows down here around 94.5, 94.60. The 4-hourly charts do look bearish, and a test of this area, so 94, this sort of FIBO area here, 94.5, 94.50, no, 50.60, would not really surprise. The dailies are not telling us an awful lot though, so I wouldn't be laying too much on it. The 100-day moving average, that comes in at 94.60 as well, so you'd have to think that's going to be pretty good support, and maybe buying it there if you're into dollar Swiss. Personally, I prefer to leave it alone and trade the euro for the time being, but if you're into it, buying it around 94.5 with a stop loss probably somewhere just below 94, I think would probably be the play. Looking for the next move back up to the, so this is the 200-day moving average. This is the 100-day, which is at 95.90. So maybe those parameters are going to cover it for a little while. We'll have to wait and see on that, but I think that's probably the way of it. The Aussie's made a very good recovery from the sort of 75.5 cent lows, helped in no small part by last week's surprising jobs data, and it's been up to 78.48, where it's topped out at the this 76.4% FIBO resistance of the move down from this level here. The 4-hourly charts are actually overbought and appear to be turning a little bit lower. I wouldn't get too excited about that, I don't think. We might see a move back down to 77.20 today, possibly even 77 cents. I don't think we're going much below there. But for the time being, the dailies are still pointing quite firmly higher. So if that 77.40 area gets taken out, which is important because it's the 23.6%. This chart's a bit messy, I'm afraid, but it's 23.6% of this move here, and that could take us up to the 100-day moving average at 79.34 without too much of a problem. We've got a high in here at around that level, 79.34, so, or 79.40, I think it was. But so that's definitely a possibility. But I think in the long term, the Aussie's still not looking good. The chances of an RBA rate cut are high. Iron ore prices are not looking good. They're below $50. They closed at $49.40, I think, on Friday. A lot of analysts are saying iron ore prices are going to $35 a ton. So if that's the case, I don't think the Aussie's got too much strength ahead of it, unless the US dollar, of course, really does take another big hit. In which case, the Aussie is going to head back towards 80 cents. But I'd be fading into it. I think selling into it, building a structural short position, and looking for a return lower. Where those of you who've seen this before, I think we're back close to the 100-month moving average. But the head and shoulders that I've been watching for quite some time, the target is way down here at 60 cents. So while we're mucking about here, that's fine. I think it gives the shorter term charts a chance to unwind their oversold condition, but eventually I do think we're heading down here. 75 cents is the RBA's target, so that's down around the base here, and then there's going to be some very important support down around here. This rising trend line, 2 levels of FIBO support, and that comes at just around 72 cents, slightly either side of 72 cents. So that's my target really. That seems some way off at the moment, and in the meantime, we could yet get to move slightly to the top side, but as I say, I would be fading into it. The same really applies to the Kiwi. Let's move forward to the Kiwi. Well, that moved higher. It tried to take on the resistance at 77.40. It reached on Friday. It's closed back below there at 76.80. The 4-hour charts do look as though they might be rolling over, but they're not severely overbought. So I think initially we might see a bit of a turn lower, but I wouldn't get too excited about it yet, I don't think. The daily charts, as you can see, look as though they've got some good positive momentum here. So while this is going to be strong resistance, the 77.40 area, if we do see an upside break over the next couple of days, we're going to possibly head strongly higher to around the 78 level, which will be strong resistance, and then beyond there, up to that charts, the 200-day moving average at 78.75. That'll also be strong, but beyond which will take us back up to sort of 70 or 80 cents really. I don't think we're likely to go up there yet, but the daily indicators are positive, so it looks to me as buying dips for the short term is probably the way to go. Equally, the weeklies are actually looking mildly positive as well, so I think it's possibly a bit dangerous to be overly short the Kiwi at these levels, but I would be looking to sell into it as we do approach 80 cents. Eventually, I think we are going to come back down. We're going to test this for 71.5, 71.75 is actually that low there, and then we're heading down here to 71 cents and below, quite a bit lower, I think, but that's possibly a move for 2016 and coming into the Northern Hemisphere summer as we are sort of in May. It looks as though for the time being we are going to be into some more choppy trade. Then into June, July, August, it wouldn't surprise me to just see the markets mucking around before perhaps later in the year the Kiwi does head lower. But I think a lot depends on the risk attitude to whatever happens to Greece. So that's going to be playing well into the markets, and if the US dollar does find a safe haven bid again, then the upside for the Kiwi will be limited. So that's about it. What I might do is go and have a look at the dollar index. Okay, so as you can see, the dollar index reversed pretty sharply last week. This is a daily chart. Got back down here to this sort of 90, what was the low? 96, 97 was the low. It looks as though we could be headed lower. The indicators are looking a little bit precarious. There'll be support down around here, around this trend line support here. That's at about 96.5, and then back below there at around 95.5. I don't think I'd really want to see us go much below there. That's the 23.6% FIBO at 95.30 of the whole move up. Let me show you. Right, the whole move up from 78.90 to 110.40. So I don't really want to see us go below here. We've also got some more minor FIBO support here at around 96.65 of the 23.6% of this move up here. It's a little bit complex, this chart, but that's the general idea. But I think probably buying dips if we see a dip down towards this sort of 95 area, 95.30, and looking for the next leg up. I think overall the dollar's still in a wide consolidation range. But if we go and look at the weeklies, the weekly MACDs are somewhat overbought, and they do appear as though they want to roll a little bit lower. So the stochastics and the RSIs have already come off their peak. So it does seem to me as though there could be a bit of downside to the dollar index, which could be a signal that the euro is going to head towards 110. But as I say, if we do see it, I'd rather be a seller of euros at those sort of levels, looking for a return lower towards the bottom end of the range eventually to 105, and then further out a fair bit lower than that. So that's about it for the dollar index. And as far as economic data goes, today's a little bit thin on the ground, although we do get the New Zealand CPI first thing this morning kicking things off. What else have we got later on today? There's the German PPI, as I said earlier. There's not an awful lot out. The RBA Governor Glenn Stevens will be talking in New York tonight, so that'll be worth watching for Aussie traders. Elsewhere in the week, we've got the RBA minutes and the German and European EU ZEW tomorrow. The Australian CPI and the Bank of England minutes on Wednesday, to be followed later on by a bit of housing data from the US existing home sales and the house price index. Thursday sees the NAB business confidence for Australia, and as well we get all the flash PMIs, manufacturing PMIs, starting off with the HSBC China number on Thursday. That will also include the UK retail sales, and of course the usual jobless claims numbers, Thursday jobless claim numbers out of the States. And then on Friday will be the main event of the week, which will be the Eurogroup meeting, which will be discussing the situation in Greece. There's a little bit, there's US durable goods on Friday as well, late in the day. and before that the German IFO. So that's about it. It's going to be a pretty active week right the way through, but the focus will be on Friday, I think. So in the meantime, have a very good week, and we'll talk to you next week. Cheers.